Yo, guys, how are we? Right. Sorry, I'm a bit late. Let's see. Boom. Hello. How we going? I've been a little bit caught up trying to connect everything. It had all disconnected for some reason. The last week when I did the stream of luxury, it didn't go onto YouTube for some reason, so I had to recalibrate everything. I've also tried to get this damn live chat box working, and I didn't give myself enough time to test it. So if you're on YouTube, there's a link on my X to the YouTube. Come say hi in there, please. If you're here anyway on X, please let me know. It's all working. You can see me and you can hear me and everything, because I can see there's over 100 people here now. So yeah, we're gonna get into it tonight. We're going to look at Bitcoin, Ethereum, Solana, and hyperliquid as I normally do. We're going to run through things in a little bit more detail, and kind of the plan that I've had has come to fruition in that it's moved back up to the supply zone that I've had marked out for, well, basically all of last week. So it's come up to an interesting point, and then we're going to talk about taking a loss and mentally shifting to the next trade, how I do it, what kind of actionable advice I have for that. Someone asked me by DM, so I said I'd feature that in the stream, even though I haven't really prepared for it, so it's going to have to be just relying on stories. And then at the end, I've got some trading books that I recommend, and I've got some notes on how they helped me. And I just want to share that. You've probably heard of some of them maybe not, I'm not sure. But it's more kind of related to the psychology and trader mindset, habits, lifestyle kind of universe perspective that I've tried to focus on in order to improve myself to be a better trader. So it's kind of a little bit deeper than what probably is necessary, but it's what I went through. So let's run into it. Let's start with the charts now then. We're looking at Bitcoin here on H4. So I've got the levels marked up from my video this morning. This big area here is Derusex says yo. So this is working cool. If anyone's on YouTube, please say hello. I really want to see if this live chat box is working. So I had this all marked from the video this morning, and these are the compression outlines. This is quite an obvious channel of compression. And then what you'll normally see in compression as a concept is an impulse out of it, or obviously if it's going the other way in a downtrend to the downside. And then what it does, once it's done that impulse, it's either going to continue, and this is now like a bullish trend that's formed, or it's going to come down to the base of where the top of the compression is, find some strength, and then continue. Or it's going to come back down and then move back down to the base of the compression. So in our bearish example, which we have now, we have the compressed channel like this. And then what I would expect is price to impulse to the downside. It hasn't done that. Instead, what it's done is comes out of the channel, looks like it may move down, we're sort of like at this point here, and then moves up, and it has moved up to the base of that compressed channel, because that's where it's going to find the liquidity. And then if this has got an impulse down and then you've got the compression, you know that if price is going to break out of this level, out of this compression and move up, it's going to move to the next area of liquidity, which would be a supply zone, in order to try and find liquidity to move to the downside or use it to fuel a move up. And these kind of spaces where you've got an impulse are usually the empty spaces in the chart where price can just rip through them. So it's going to seek this area where it knows there's a lot of buying and selling happening to find the liquidity. So that's kind of what has happened here. It's quite nice. Let me just get rid of all that shit. We have that here where price has impulsed down. We have on a lower time frame, if we look at the hourly time frame, another sort of compressed channel, and then it impulses down, creates another channel. So with that in mind, whoops, back to the hourly. With that channel, you've got the base of it here, and then the top of it here, right? So these are our levels we can operate with. I would say what is quite likely is that if it breaks this level here at 67.5K, it's likely to move up to this level. This is kind of the bottom of that compressed channel, right? I would prefer it to come deeper up here. So this may hold and then send it down, but if it breaks, then it's going to come right up to the most extreme part of that compression. It's going to eat through all of the space in the middle, which is what all of this is over here. It's just eaten through the space in the middle and traveled to the extreme now. So it's got a decision to make, similar to when we were at 82K on the daily time frame, where you've got a deep area of liquidity and price kind of comes up to it, and then it becomes a point where if it breaks above, again, you've got that compression, impulse, compression, impulse. If it breaks above this point at 84K, then it changes the market structure to the upside. But it didn't, it respected it, right? So now back down on the hourly, this is kind of that 84K level-ish. I'd say probably this one, because that's where the market structure changes above there, and where you have to start asking, maybe we are at a bottom. But until these levels are broken, we're still in a downtrend. We've taken out key support, and we were looking like sinking until this big candle. Now, I don't know if that is just a sucker rally to get people to go short, or it genuinely is kind of the start of an uptrend. I can't quantify that until one of these key areas has been broken. But the first key area is this, and it's like taking a couple of hits. Like, you can take that first hit if you're bearish, but you'd still look for a reaction here. You can take that hit if you're bearish still, but it's starting to get to squeaky bum time, but you can still swallow it. And then up here at the extreme, that really has to hold. Otherwise, then you've got the market shifting. It may fake out and then continue, and this is where you look to get in, or it may hold on a retest and go. So I'm still bearish as long as 71.5K is holding, and that's fine to look for longs in this environment. As a personal preference, I don't like taking longs in retraces, because I can't say for sure that if I'm looking to go long, I haven't seen enough signs down here. I can see the counter signs here in hindsight, of course, but I was still thinking, right, we're going into the weekend at this point. It might still round off and drop, which was the quick continuation scenario. The other one I outlined was coming deep and then building. So knowing that's what it's probably likely to do, considering we're in a pretty hardcore downtrend, I wouldn't be comfortable taking longs, because I know it could top out at any moment. This might have topped out here on another day, same as here. But that's just a personal preference of mine. I know that you can absolutely trade the relief of a big downtrend. I prefer to trade the relief of a retrace back to a key supply zone in a downtrend. That's where I'll get my money. like I've done at 82k, right? I didn't long on the way up, but I shorted a couple of times around here and then got the big move down. That's kind of what I'm looking for at this point, and riding like the 5-6 hour trade that might come from it, and not be looking for longs on a retrace, because it just kind of, I'm trying to reduce decision fatigue in my head. I'm trying not to cloud my like decision making with multiple different scenarios of multiple different scenarios and plans of what could come next. I don't really want to like play it for the sake of it. I'm not tuned in enough to the charts to be able to do that, but you can absolutely do that. So yeah, that is just my personal preference, is to now look for this to be a retrace, or whatever move we get to be a retrace, and then to show signs of exhaustion. We might get the complete opposite, the inverse of what we've got here, where it might start compressing up, and then instead of impulsing out, it comes back and then fills in to the next area. But I think the odds are more likely to be that, considering we're still in a big downtrend, we've taken out support, multiple levels of support. It dropped a good 30%, so it needed time to chill. It looks more likely that the odds are this is a retrace to supply before further downside. So I'm just looking for the exhaustion. So, you know, just a typical range pattern at the top, couple of lower lows out of the base, maybe one more retest and go, or maybe a fake out and a big drop, you know, on H4. Look, this is the range that I took. It was broke out the lows, lower high, lower low, lower high, and then went, and I entered on that lower low about halfway down the candle, and then about here on the lower time frames, looking at this as to be a lower high before that move. It was a pretty good trade in hindsight, but I'll be looking for this sort of behavior essentially at any point between 67.6k and 71.6k. It could come all the way up, and the higher it goes, the better for me, because I'll know that it's do or die here, and it's more likely in a downtrend at these types of places it's going to do. I know when it comes more shallow, in the same way that we have this range down here, right? It breaks out of the compression and then looks to go several times, but can't break the lows, and then it moves back up. Might see a similar thing here, but maybe something that looks more like a breakout to the downside, and then it fakes up to the really key level, and then it goes. So that's essentially what I'm looking out for, is just a really basic reversal pattern that you can find anywhere, or a bear flag, or maybe, like I said, like a little bit of compression. I want to go back on the hourly. Maybe a bit of compression all the way up, and then it kind of sinks down like that. That's what I'm looking out for. So when I come on your timeline, I'm talking bearish. That's why I'm not doing it to rage bait or anything. That's generally what I am seeing. And when I switch bullish, you'll know that I'm not doing it for engagement. You'll know I'm doing it because I'm genuinely bullish. You'll know that I'm looking at long setups for a reason. So yeah, and I look forward to that. So this is all I'm looking out for. In the event that, you know, the stars don't align and I get this really clean and obvious pattern to short, and it just comes down like that, for example, I'll know this is the first sort of trouble area, I guess, for shorts, because this is where obviously we had this big impulse up bases, and then instead of continuing back down, it pushes up to the highs. So this is where the market is really going, right, we're going for it. Like, we're going to go as high as we can. And if it tops out and has to retest this liquidity, sometimes that's when it continues, this is where you look for those areas along. So if it broke this level, for example, your short isn't 100% guaranteed until the market structure changes, and then we move to the downside. So when you see that, you've got to respect we're in a local trend, and this is the line in the sand because this is where the attempt is being made to push up, you then have this area here as well, which is, like I said, you can maybe afford to lose this level and hope that this level holds. But in a higher time frame downtrend, when you see this first one get taken out, it's more likely that this one's going to get taken out. But if you're in an uptrend and you're bidding this level and you get stopped out, you've still got something like this to bid. But once that has gone, it is sort of night. So this is a key level here, 65.6. If it does just come down and maybe put another attempt up that fails and then starts creating lows, then I'll get short. So there's multiple different ways that you can skin the cat, basically. But all it really comes down to is, where's the deepest area of liquidity that is important? You got to give that level context. So this area of compression was sitting on the break of a key demand zone or a key low, and that's where the sell-off kicked in to break the next level as well. If it maybe had just come like this, probably wouldn't have been as important, but the fact that it has been the origin of the selling that took out this low makes it important. Damn, I forgot my point. Shit. I need someone to remind me. Damn, I was really on a roll then. Never mind. But yeah, so essentially you need to look for these areas of compression with context. But all I'm looking for is, to define those levels. I remember what I was saying now. You've got to basically define those areas that are important, and ones that are kind of a B grade here. I don't know what I was writing there. Where I'm not as keen here, I'm not as keen here, but up here I'm a lot keener because it's on the break of this low, and instead of faking back up, this is where it kicks in to create new lows. So I can take a couple of hits, but at somewhere it might even come in the middle of it and just do the complete opposite of what I was saying and not eating through to that level. But essentially all it is just for price to go sideways, not take the first breakout, because I always look at that as a signal, but more the second one. But in ranging environments, then it might be the third or the fourth one that is actually the one that goes, and you get a lot of fucking around up here that you have to sit through. And that's just part of the process sometimes. It's why I sometimes go in like with reduced risk. And then if you've got maybe like the first two, I might go 50%, and then it might come up, or try and test the highs and then come back down. Then I might take that again as another 50%. And then it might come back up one more time and then hit the lows. And then I might hit that with a 0.25 with a stop above the most recent breakdown, expecting that to go. So I'll scale into bigger positions on a higher time frame. I wouldn't do that on M1. I would basically wait for, on M1, I would wait for the right moment to go all in, just because, again, I like to reduce the decision fatigue with trading. So just going to be looking for that somewhere between here and signs of reversal, and take a chance that I'm right. Maybe not the first push up, maybe a potential second push up. If we get that, for example, would have a little bit more conviction in it. But yeah, just looking for it to range somewhere, or like I said, if it isn't going to be perfect and it just breaks this level, 65.5, and then I'll look for continuations to the downside. But I suspect it's probably going to go a bit deeper with the retrace. But this is a pretty nice level, in the same way that, we had a really nice range here for months, and it ended up retracing right to, didn't quite test it, but right up till the like the deepest place it could sort of get away with it. Above there, it would have been bullish. So we might get a deep retrace like that, where we've got a key level sort of here, but it moves more towards this one. And then if we just go back down to where we were locally, it may not be this one, it might be more that middle one in the same sort of fashion, like that, you know. Could play out really quickly, could play out for days, could play out for weeks, but that's essentially what I'm looking for in Bitcoin. I don't think there's too much reason to be really bullish, but there was definitely reason for going long. My personal style is not to do that. But when you've got these areas of compression, like we've got, I keep saying to the guys on the subscribers, like you'll get these areas of compression either diagonally or sideways, and it's the impulses out of them that are going to define what the market is trying to do. And then you want to get in ideally on the retrace, or or the second break, or sometimes it just continues, and it's up to you to have the discretion and the amount of reps to decide when to do it. But usually when you've got these levels around other key areas, like this level was where the previous swing came from, and again we've got a very similar level here where the breakout of that downtrend, this is the origin of the swing. So if it comes back down and takes that, that's when we go to 52k. And I don't know if I trust that as a bottom, but I'm pretty sure at some point it's going to get tested again. So yeah, that's kind of how I'm looking at Bitcoin, basically. Short bias, but I still think this has potential to run a bit higher, more up to like 71.6. But I am looking for a good short opportunity, because I just think on the higher time frames, this is more likely to probably like chop around and then sink than come back and do that, in my opinion. Might be wrong, but I'm wrong above 72k, and then I get involved to go long, right? So that's the plan. All right, now let's move on to Ethereum. Spitfire's here, yo. I am live with these guys tomorrow, Spitfire and Cake, so I will post a link for that. Looking forward to it. XZ, what's good, bro? I'm good. How are you? Thank you. Ethereum. H4. Right, we'll whiz through this because I've already spent like half an hour talking about Bitcoin and I'm late. So daily time frame, same concept. You've got the compression here that's sitting on the break of this big low. Big low. Basically the origin. Same concept. You've got the line down the compression, the breakout of the compression, and then it puts in this massive swing and returns back to sender. So these are kind of nice fractal patterns to look at, and we've got the same that didn't happen here because it actually impulsed down, whereas Bitcoin, for example, didn't and moved back up like so. So we have a good example of that. Comes to test the low of the compression, sort of around this point, and bounces, but doesn't go too far. And then look, eats all the way through the compression, is now coming back up to the deep part of it. So very big impulsive move today. Nice range that had formed and was basically spending all of last week in. And then it comes to the top of the range, creates another range like so. And then I wouldn't have taken this personally, but you've got exactly what I was just sort of saying. You got the range and then you got the breakout. And sometimes it comes down and then you can get the second breakout as confirmation that it's a trend that's going to continue. Or you wait for the retest, but you miss it in this instance, or it's just going to continue and it kind of breaks out and then on the lower time frames is going to continue. But that's not one I would take. Oh man, some guy got his knickers in a twist on the other day on my X. I said that I just think basically all trading is, or trading can be as simple as just waiting for it to go sideways and break out. And he was like, oh no, what's the statistics of that breakout? There's nuance involved, and you have to understand like your strategy and your approach from the market very well with thousands and thousands of reps. But like I've been saying, my nuance is waiting for the second breakout, waiting for another little mini range on the break, like little things like that. You have to read the market, right? You have to read what's being said. But yeah, so I wouldn't have taken that, but it was a nice play going on recent sort of USA kind of vibes. So similar outlook. I'm just looking for price to come back up towards the end of this compression. And I think really I'd marked it on H4, but the end of it is more like 1938 down like so. I would probably mark it like that. And you can see where the impulse was. It has a pretty nice little supply zone. I mean, the bottom of it is down here and it just about taps it if you want precision. But I think, you know, it's likely to eat through all of this and come back up to this area here. Above there, start maybe thinking, let's get long or look for longs at least, because this is where the market structure sort of flips. Above 2148, yeah, because if you've got that previous range high here, you got the low there, this all looks like you got the range. So you got the range, the breakout, the retest, the higher high, and then the complete failure to the other side of it. And now it's putting in a potential lower high. I would expect this range high, nice confluence. I would expect this range high to hold or maybe just above it and then send us down on a worst case scenario. But bearing in mind where we are in the trend, I'm not sure quite so much we're going to get that. You can see similar behavior here, right? Comes down, breaks out, retests, tries to go, breaks to the downside, but then just keeps going. We haven't got much further to go, I think. So yeah, I can't see a world where this is going to drop another like 60, 70% or so, which would that kind of price action I was showing just then would suggest, but maybe it does. If it comes back down here first before touching this level, for example, if it just comes down, I would just be looking for this to fail because this isn't really that strong of a level. You can see how low the volume is and then just bursts up. This looks like a bit of manipulation if you're looking at the volume in the candles. If you're looking at what precedes it, if you're looking at the key level here, the strength in the sell-off, and then just how thin this all looks. So I would imagine it's probably going to top out, and I'm going to look for the exhaustion of it to short back down, ideally around there. But as a last chance saloon, probably like I don't want it much higher than that 2100, wasn't it? Which is not there. It's more like, yeah, it's more like here, this range. Above there, I think the trend's changed. I know there's a long way to go, but I think that it could put a lower highs up as here and still come down. ETH is king of the shitcoins, don't forget. So yeah, just looking for reversals still, and then I wouldn't start looking long again until there. And the thing is, it does look quite high from the bottom, like here, for example. If you, I only got bullish here above 2000, and then it runs back up, and people will be like, oh, it's only like a 2.5x or whatever. But that's like really good. It's at all-time highs, and it would probably go a lot higher anyway. But I haven't, that method where I get the confirmation here rather than here, I get it down here. Yeah, I've missed the absolute bottom, but I wasn't trying to catch it multiple times here or here until I've got the right confirmation, or even like here or here, right? Because people have been buying all the way down. There's been engagement farmers just telling everyone it's the bottom and to buy the dip and go all in and stuff. And you have multiple highs and stuff within that point. But this strategy is what keeps me missing out on all of that, but still getting a big move to the upside in the next cycle. That's what I did with the last cycle. I missed most of the bottom. I could have got in at 17k in hindsight, 18, 19, 20k, but I got in at like 23 and a half, 24. And it still went 100 grand up, right? So that's why I've got my line in the sand up there, because I want to be extra sure. So anywhere below that, I'm still looking for signs of exhaustion and for this to move down. Coming into summer, so I wouldn't be surprised if we do see everything ranging and then eventually drop. But yeah, for now, that is what I'm looking out for. So here we are on Solana on H4, and this has got the Tom Ree said Ariri. So now Solana has come back to like the key point, the end of this compression. The next key level, I would say, if we've got all of these lows here, I wouldn't really start getting bullish again on Solana until, again, you can see the end of this compression here, sort of like that. I wouldn't really be getting bullish again until above 86. But that doesn't mean that down here isn't a good place to buy, right? It may still go to $50 like I think. But if it ends up going back up to above $200, for example, it's not a bad buy down here. You're just desensitized to the fact that it sounds not like 100x and more like a 2x. But if you've got a couple of them in your portfolio, that's not a bad sort of shout, is it? Even if you do end up buying quite high, at least you've got the confirmation that it's not going to zero, which is like a pretty good outlook in some things with crypto. So same sort of thing. It has the compression down, retraces out of it, is going sideways, tries to go at this point, and this is why I say don't take the first breakout. We want to wait for the second one to confirm it. Don't take the first breakout, wait for the second one to confirm it. And then it's just bounced off of the resistance or the range high as support, and then move right through to the end of the compression with relative ease over the past 24 hours or so, and is now coming up to really the base of it on this time frame up here at 77.00. So that's really where I'd mark the end of the compression, and then you can see you've got a little bit of an impulse out of the previous compression, which is kind of separating these zones. So yeah, then the next area, extreme area, is up here. Might come up there, in which case it would be a pretty epic short with my bearish hat on, or an opportunity for one at least. And if it fails, then you know this is where the market structure changes. So if you've got a range that forms and you go short when it breaks out below it, but then it breaks above it, you know that this has failed and the market structure is changing into move up. So you look for longs above there. But the key is, like what I say, when you've got a big move like this, which is still counter higher time frame trend, still within a big zone, like up to here, sometimes just taking a few smaller bites at the signs is your way of feeling the market out without absorbing massive loss. Because again, you're still going against intra-week trends, and you're fighting against the herd mentality where everyone's, yeah, it's going up, we have to go long, and bears are racist, and you know the score. But blowing your whole load on the first one is going to hurt if you get multiple like incorrect signs, and then it comes up and you're down like 3 or 4 R on the lows that didn't go. Because the thing is, if it does go, if you're doing a breakout strategy, or maybe you're taking some limit orders, when it does go, usually it retests, then you can get in again. Or you can just chase it with a tighter stop because you've got multiple signs. But taking smaller ones and then getting that like absolute banger of a reason, like you imagine you've got this big wick to the upside, and then it shoots down with one big candle below the lows, and you're like, right, this is a breakout trade I've got to take. That's when you go and increase the risk, for example. So you don't want to just be like trying to fade this move willy-nilly because, right, it's gone up to a key area with a lot of confluence. I used to do that, and the strike rate is bad, even though the risk reward can be very good. I couldn't deal with the amount of losses it takes, and this is why, hence, I preferred this range thing. Ranging strategy with the breakout and then managing the risk to ensure you're not swallowing massive losses there. So yeah, I'm basically just waiting for this move to exhaust here or here ideally. That's when, can you imagine how bullish everyone's going to be up here if it gets there? But if it breaks here, I'll look for a retrace to get in. Or if it does break here and come down, I'll look for the continuation if that fails. But I do expect this still to be going down based on what the price action is saying. I wouldn't be surprised to see this all get tested again at some point. Even if it does end up coming here, which we really don't want if this is gonna, if this hasn't bottomed out, because it's gonna spend a few months grinding again before lower lows. It would be nice for the whole market to have a little bit more confirmation, I guess, or a little bit more confidence that there's a bottom in by like just having one more impulse down, because that would really be like, right, that's it now. You've had 3 big impulses to the downside. That's I'm pretty sure that's the bottom of the market. I'd rather have that then and start building rather than like a lot of uncertainty and big ranges like this for months on end. I mean, this is a pretty significant level. If it broke out of there from a months-long consolidation, it would be a pretty nice bottom. But I still think this hasn't been enough bloodshed just yet. But we'll see. Now, hyperliquid is the really interesting one. Stein is here. Hey, man. The good thing for the shorts is that we are just V reversing into versus after a huge range. Yes, that is actually very true. Good point, my friend. So here on hyperliquid, I have no directional bias on it. I'm inclined to believe, based on it being a crypto coin and where we are in the market, I would not be surprised to see this top out. But I also know that there is a very big movement behind it, and there is a lot of like positivity with hyperliquid, and it is crypto. So I wouldn't be surprised to see this $100 next month, right? Because it's undeniably been in a very good trend. And the way I looked at it, this was the key level where if price breaks below 55, 54, this is where the buying took place to fuel the move to make the all-time highs. We know if that broke, it would have been bearish because the market structure would have changed, and then we'd be moving down to probably the origin of the move down here about $25 to $30, right? But it hadn't done that. It again, ranges, don't take the first breakout. Don't take the first breakout. Potentially take the second breakout. If you had longed that candle, for example, with a stop below it, then you've got pretty nice risk reward. And you know if you get stopped out at that point, it's probably likely to go down, especially after doing a big swing like this. So the best way to play it is if this level breaks, the market structure attempt, this is like the market trying to send it lower here, right? Right at the top. Puts in the range, and on the second time with strength, it goes. It still may come within this range and then drop. But if it breaks this level, which it looks like it's going to do, we want to find somewhere where the market can be held up from on a lower time frame, in which case I look for longs there. If that level breaks, then I'm pretty convinced that on a higher time frame it starts to go lower. So on H1, and we've got that key level there, breakout of, again, just simple ranges. They don't have to be perfect. You just need to see price going sideways enough to get the story. Impulse is out, compresses up, impulses up into supply, and is now probably on a lower time frame. There we go, ranging sideways. I'm not trading this intraday. I would mark it like that. Comes down, tries to break for the upside for the first time. I would like to see these lows hold if I'm bullish, and then break up to the upside again, and then I'd be convinced that this is going to go higher. But I have seen these fail, and you really want that impulse. Like this is the level here, which broke the impulse, broke out of the impulse. So you know there's a lot of buying there, and you need that to hold really. And this is on M15, but it lines up pretty nicely with where the top of that compression is on H1 and M30. So plans are for that to hold and look to go long. Below that, start thinking short. And then you've got the end of that compression that really would need to hold, but also provides a very nice long opportunity, because if it does hold, you're right in there before the market structure changes, and then you've got a pretty nice trade to ride up. So a couple of good levels there. Looks like it's going to break this point, but got to bear in mind that there is a top pattern here as well. So if it breaks that and holds, then you've got $100 in the next couple of weeks if it breaks this, for sure. I'm just not sure because I haven't looked at hyperliquid well enough. And like I said, there's so many factors which make me think it could be an exit pump, or it could just be like major manipulation before a downtrend, because that's what the rest of the market's done. So I'm not really sure on it. I haven't got enough conviction, but based on what we're seeing, it certainly looks like it's going to be going way higher, and it's probably better to look for longs. And coming out of this low has been a bit of a test, but it really needs to break above this point here now at $68 and hold above it in order to remain bullish. So I'd be looking for that as a swing trader, as someone who isn't like taking loads and loads of trades on hyperliquid, hasn't watched it for that long. I'd be like looking for the most certain signs, which is what I'm doing. But in the meantime, everything looks very bullish. So this is, again, and this isn't a hot take or anything, is it? But this is like the only bullish looking thing in the entire market. So yeah, that's Bitcoin, ETH, Solana, and Hype. Wow, that was like 45 minutes. Crazy. But there's been a lot to say, right? We've had a lot of good movement. So hopefully there's been a lot of sauce in there. Let me know if you've got any questions or comments. I'm just going to have some water. People are talking on YouTube. Hello, YouTube. It hasn't come through in this live chat box. It's so annoying. 68K in short. Hey, Matt. Rohat. Hello, Matt. Rohat is working. Also got single prints from 68.3K to 68.8 on Bitcoin. 68. Yeah, nice. There you go. Yeah, no, very nice. So it's looking, there's a lot of confluence to look for downsides. All right, next section, which admittedly I haven't prepared for, I'm sorry. So I'm just going to draw on some experience, was about how to take a loss and then move on very quickly in order to take your next trade, or, you know, not to wallow in self-pity for too long. And really the answer to doing so, this was a question by DM, by the way. The answer to doing so is that you have to go through enough of the pain in order to just become numb to it. I think with trading, that's certainly the way it was for me. I think I liken it to, you know, like a thermometer where you've got like a certain setting on it of the mercury, and it just gradually depletes with every like hit to the soul that you take with trading. Sometimes that might be like you've blown an account, you've lost a challenge, you've lost a funded account, you've taken like loads of small cuts to your personal account for an extended period of time, and then eventually just like you snap and take a big loss. Like these things that really hurt your soul in trading, I think once you've had enough of them, it sort of just kind of numbs you to it, and something snaps inside your brain where you're just like, I'm not going to do this again. This fucking sucks. And that unfortunately can be many years, because, you know, when you're in the learning phase, particularly, and you're taking losses, you can justify that it's part and parcel of the experience. It's what is normal that you're going through. You haven't been doing it long enough. And you're still figuring out the ropes. You're still figuring out like what you should be doing. You don't have enough confidence in yourself because you don't know it well enough yet. So in that period of time, it can be kind of like easier to accept, until you start getting to a point where it's like, this is fucking ridiculous. Like, why can't I win enough? And then really it will just be, you've done enough, you've done your ass enough times that you are just fed up with that feeling. You are just fed up of experiencing that pain. And sometimes the whole that thermometer thing doesn't have to be empty. It can just be at a low enough level that you still feel it, that you're just like, I'm not going to do that again. But when you have got to a point in your journey where you know what you're doing, where you know how to trade, you know, you've got reference points where you've maybe booked a few months in a row that are green, and then the next month might be break even, and then you might get a few more green months. But over like a 6 month period, you've been consistently green, and then you get a year where you're consistently green, and then you go on a spiral, or then you go and take one of those soul hits, and that's when it really really fucks you up, because you know you can do better, and you know you are better. And at that point, again, you just kind of have to go through some like really dark shit in order to try get out the other side. And it's just reps, reps, reps. Is just taking loss after loss after loss, taking those soul hits, and then it kind of wakens you up, or it should do. Like, there are people obviously that have been in this many, many years and have not managed to break through yet. But you should be looking at like getting enough frustration where you sit down and take it seriously, and you have to examine what you're doing wrong all the time, and what you have to change and what you can change. And it kind of, for me, developed this attitude where I was like I talk about the daily confirmation, the double confirmation thing, right? I wait for 2 breakouts and then I look to enter. That was born out of frustration, because I'd had enough wins doing that. Then I would take the single breakout as the trigger, and would get caught out so many times. And eventually I just like got so fed up with that feeling that I was like, fuck it, I'll just take those doubles. I'll ignore this feeling I have. I'll ignore this voice in my head that is telling me, you're missing out, you got to take it now. Or this is exactly what that double confirmation looked like before. And if you take it now, you get better risk reward and you get a bigger move and all this. Like, I just thought, ignore that, and I'll just do what I say. Fuck it, I haven't got anything to lose at this point. And that was the moment which kind of switched things for me, and kind of led me to, I'll just take the loss and move on, because I realized it wasn't, I was making it deep, like for whatever reason. It was triggering something in me that I hadn't yet solved, and then got to a point where it's like, I've had these major losses, and I'm still here, I'm still going. Like, it's not that bad just to take a couple, is it really? And you kind of manifest the losses as well when you start thinking, oh, this is going to lose, or oh yeah, this is just going to come back down. It would be so typical of it. You kind of manifest it then, because you start taking shit trades knowing that you're gonna be correct in your negative outlook. So the answer to that really is, for me, my experience anyway, was enough pain that makes you take it seriously enough to journal things, not just your trades, but your mind as well. Because I read a quote on my phone that I had in my notes section from like 3-4 years ago, literally just before the stream, and it said something like, oh shit, what was it? This is the second time tonight. I go off on these tangents and I forget what I'm saying. Fuck, man. I'm sorry. Someone remind me. This is when I've been fried all weekend from the family, and today has been a continuation of that, and I'm zapped. Why don't I just try and find it? I'm sorry, I'm normally really like easy flowing here, but sorry, I'm just gonna move it on. I was coming right to the end of it then. That was like the punch, and yeah, I fucked it up because I forgot on the tangent. I think YouTube is a bit quicker. Does anyone know what I was saying? Stop smoking weed. Yeah, maybe. I haven't even smoked today, man. You fucking asshole. Well, you are probably right, but I haven't even smoked today. Right, let's move on to the books. Yeah, because I was looking at the books, right? So I've got a few books which I want to talk about, and just kind of give some recommendations based on this kind of mindset that I've built myself, and which I think are pretty important in order to take the losses, for example, in order to go through the process and continue and not lose hope, because it's really easy to lose hope when you're doing this. So in no particular order, really. So what I've done, these are books I read the other year, and I took notes on them on my phone about what I got from each book and how it helped in relation to trading. So I'm just going to read the notes, and then I'm going to expand on it a little bit. And actually, I'm going to start with this trading one. There's a mixture of trading and sort of mindset and lifestyle and psychology, if you want to call it. Well, one of them is literally called psychology. So the first book is The Zurich Axioms by Max Gunther. Max Gunther, should have known that. This is a great trading book. This is what I wrote on it. Third read through, and always a good reminder of the trading mentality and approach required to make money. Risk more when the situation calls for it. If you're comfortable, then you're not risking enough. That is growth. Don't confuse hope with a hunch. When the ship starts to sink, don't pray, jump. The axioms in the book require a hard mind and experience to use effectively. So this book was recommended to me by Will Hunting about 6 years ago. And it is basically a list of rules. It says used by the generations of Swiss bankers on the cover. Probably just a little bit of a marketing thing. But it is essentially a list of rules in order to trade profitably, trade consistently, and the mind required in order to have longevity in the game, and the right approach in order to grow your account. Sort of like the right habits for it. And it's a nice little way of hardening your brain when you hear some like quite cold and harsh advice in this book, that when I was reading, I was definitely in the mindset of that's me, like this guy's talking about me. um so I'm sure a lot of people can relate to it. I don't know how it's a pretty popular book, but I never really see many people talking about it, which is why I've kind of included it in this list. But it's a really good way of maybe developing your own rules and your own outlooks, or certainly getting confirmation for outlooks or perspectives that you may already have. This is a really good book in order to kind of just, because like I said, you don't always hear the good advice and the right advice from the right sources, but this is one of them. And I know it's a very highly regarded book. So Zurich Axioms will, in some way, whatever you're going through at the moment, it will change the way you look at your trading in some way. And like I said in my notes, that was my third read through of it, and it was recommended to me in 2020, and I've read it 3 times at that point. The last time I read it was 2024. So that it was something I'm always using it. Something from that just hits me at the time that I read it, and it's something then I'll go and apply going forward. So I'd recommend that, like, just to see, like, wherever you are, it has a lot of information in that book, and sometimes with these things it's a bit of overload. But the way that I look at reading books is that I'm just trying to get some key information from that book, which is going to stick with me, which is relevant to me. And it's usually the part of the book where you just kind of go, like there's some sort of like eureka moment. And that's kind of the key message that I'll take away and then use it with my trading. And then on another read, something else is going to hit me, because I might have, like, sizing up with that book, for example. It says to size up, but it's not, it's common advice. But at a particular point in time, I might have been looking at that book and going, this is a problem that this is a problem I'm having. And right here in this guide to successful trading and investing, they're saying to size up and giving the reasons why and making it a rule, why it's a rule. So very good book. I would recommend that if you have not read that. And if you have read it already, here is your reminder to read it again. Next book. I should have written these out in order. It is called Turning Pro: Tap Your Inner Power and Create Your Life's Work by Stephen Pressfield. I'm sure someone on the stream knows of it, or multiple people know of this book, but these are the notes that I wrote back in 2024 about it. Won't be the last time I read this book. Becoming professional at something means you naturally shed off the skin of your old life, and you can't ignore your calling. The author relates his own experiences, which makes it feel like, after an assessment of your own life, you won't feel so lonely or doubtful of decisions you've made. You need to focus your energy 100% on the present in order to get to where you want to be, because if your energy is elsewhere, it isn't enough on what it needs to be on. Yeah, like you can see like what hit me there. And this was a key part of taking trading seriously for me, because one of the things that I neglected is the same as what a lot of people neglect, is that's the serious hard work, the journaling, the analyzing of the journal, doing the stuff that's extra, like creating the lifestyle and habits to nurture your trading, so that you can have a consistent mind, as well as like having the consistency on the charts. I neglected all of that. And when I read this book, it was kind of a good reminder of the people that take things like semi-seriously and don't really get anywhere, or they get the first success and that's what goes to their head, and then they dine off that and they haven't really moved forwards because of that. But it's also, one of the messages from the book is that you have to have a passion for it. And like, thankfully, I don't know where I get it from, but I have a passion for trading. I like solving the puzzle. I like being correct, most importantly. Like, I like that feeling. Like being rewarded money for being correct is quite a nice feeling, isn't it? And when I thought about the successes I'd had with trading and the troubles I was having with trading and the troubles I'd always had with trading, I hadn't really wanted to do the work. I hadn't really wanted to like tackle that head on. And this book is a good reminder of like what actually it takes to get anywhere in your field, because most people can see like like what's right in front of them is just like it's just there, right? You might have taken a trade that you put like a tenner on, and you go, if I put $1,000 on that, I would have got like $5,000. I knew that was going to go there. You might have thoughts like that. And people think like you can get rich with trading just being like that. And it's the same as any field. Like imagine like being an artist and you just like paint every now and then, you're not going to get that much better at it. But then if you like go into a competition, that's when you paint, and you're not going to be as good because you've not done that practice. Like all of these little things in any other field, you'd be putting the work in, you'd be putting the studying in, you'd be putting in like the hours on other things, like because your mind would be like, I'm having this problem within this field because of something within me that's holding me back. So what is that and how can I fix it? Like that's what trading does. So Turning Pro, very good book if you're serious about wanting to improve your trading. And that's like one of the key things I got from that book, because I don't think people realize actually how much it takes trading. Right, the next book, bit of an odd one, but it changed my opinion. Well, not opinion, but just sort of my view on the universe, on everything, and it kind of made me be a little bit more introspective with my trading. Let me just get the thing up. Kybalion. You've probably heard of it. 3 Initiates edition. This is what I wrote about it. And see from what I've written if it relates to you or to trading. The keys to how to live life successfully and in higher consciousness. A guide to the laws of everything and how everything is mental, that everything has duality and polarity, that things are on the same spectrum, and that knowing this means you can use the laws to live the life that you want and be peaceful. Laws such as how the pendulum swings can be neutralized using other laws to refuse to take part in a negative cycle and thus gaining mastery over mind. As above, so below. How everything internal occurs externally. Cause and effect, where there is no coincidence, but just a cause that hasn't been identified. A book to reread. I need to reread it, actually. So some of that, let me just expand on some of it, because it probably did make a load of nonsense. A guide to the laws of everything, how everything is mental. So when you're looking at the charts, for example, everyone is looking at it differently. Everyone is seeing the same thing, really. We're all seeing the candlesticks on the screen, right? We're all seeing the red. We're all seeing the, in this case, blue. We're all seeing the move up. We're all seeing the supply zones. We're all seeing like all that. We're all seeing the same thing, but the way we approach it is going to be different. Like literally everyone's going to do it differently. The way we trade it is going to be different. The way we take profits, the way we manage our risk, the way we enter, the way we get out, when, where, like all that kind of stuff is different. How long we can hold on to it for and all this kind of stuff. And yet there seems to be a kind of feeling that everyone has to act in the same way on the markets. Like it's going up, you have to be buying. Like I said earlier, I'm looking for the exhaustion of it. And when you're seeing or saying to yourself, for example, I've got in, like everything else is going bad in my life, but I think this chart is going to go up, so I'm going to buy it. And then the moment it goes against you, you're like, oh, this is just one of those other things in my life that's going wrong, so I'm going to be wrong here again. And then you like I was saying before, you're just going to reinforce that. You're just going to reinforce that and make it a reality. Whereas if you're paying attention to the fact that this is a mental game, there is no skill that you tick off and then suddenly it becomes automatic. It requires constant maintenance. It requires constant evaluation of your mind, which is dictated by mood swings from family, mood swings from work, mood swings from news or politics, or like anything in your life is on a single day is not going to be the same. And that's going to affect your trading performance. But paying attention to that side of things and realizing that you can genuinely extract as much money out of the market as you want. And it all really comes down to your mindset, how you're approaching things, what you're prioritizing, and how deep you're willing to go with it in order to improve. But if you just think that you're just going to show up and you're going to chance it on a gamble, yeah, there is a gambling side of it, but it's way more than that if you want to be consistently profitable. This is kind of a deep one, I guess. Laws such as how the pendulum swings can be neutralized using other laws to refuse to take part in a negative cycle and thus gain mastery over mind. So, for example, you've got two sides of a pendulum. You've got winning and you've got losing. And you'll have winning periods, you'll have losing periods. So the pendulum's going to be like swinging backwards and forwards, right? It's not, this isn't necessarily true with trading in some respects, because it's very hard to, because you're not in control of everything, it's random. But you can keep the pendulum to one side using other laws in this book to understand you don't have to repeat this cycle of going backwards and forwards. So you don't have to win. If you're winning, you don't have to go back to losing by using certain laws in this book, or certain mindsets and certain shifts in like your habits and your lifestyle. Like I say, it's not that on a minute scale, it's not something you can do with trading, because you're always going to have losses. But if you scale it out or zoom out, you're going to have those periods of losses are less, and then over a year's period, that's when you're staying winning and winning and winning. So it was kind of like a little bit of, yeah, I don't know, maybe I'm chatting shit here, but this was a really good book. It will make you think of things differently, and yeah, like hopefully approach the markets in a different way. The next book is a trading psychology book, Mastering Trading Psychology, by Mike Bear and I think you say Bear and Andrew Aziz. So this is what I wrote on it, because there's a lot of like trading books out there, right? Psychology books. Nothing in trading that one goes through is unique, and the psychological side of trading is a long process. Resilience, persistence, and consistent effort to improve are the keys to success, and you will be successful. Like it all of this stuff comes together, because if you look at that hard work, resilience, and persistence, you will be successful at some point. With trading, you can be working hard, resilient, and persistent for years and still not be rewarded. So you kind of have to, the thing that is going to keep you going is the belief, the mental side of it, that you are going to be successful. In the same way that like when I started these streams and when I started these videos like a year ago, it started off very small, and I just kept doing it, just hoping that things would improve, and then started working on the things that I knew that could make it improve, and just really expecting it over time to grow. And it is, but with the wrong mindset, you're not going to put that effort into your trading if you believe like, I'm never going to make it in this, so I might as well not bother doing the work. It might be a subconscious thing, but at some level you're thinking that way, and it's getting in the way of your trading. But this is a good book to realize as well that like the problems that you have, everyone goes through them, and if everyone goes through them, there like a lot of people are coming out the other side of it or have found solutions to it, and all you have to do is just pay attention to those people that have gone through things. It's kind of why I like to try and share as much as I can on these streams, on my channel, on my profile and everything, because I know that most of my problems aren't unique. We have different flavors of the same problems. We have different interpretations of the same problems. And we have different lived experiences whilst going through the same problems. But in general, there's always a way to get out of it, and you have to apply that to your life. But books like this are ones that made me especially kind of go, oh, I'm not unique in like this problem. I can have a way out of it. Let me figure it out, or let me listen to people that have had this problem, see what they did, and then go away and take and apply it. So that was a good book. Like I really enjoyed that book. And the last one, I do apologize if I have just talked a load of shit, but I thought this would be a nice little section anyway. It is Living Untethered by Michael Singer. I don't know how well known of a book that is. I can't even remember how I came across it, to be honest. But I've read it like 4 or 5 times, and I've read his other books a few times as well. What did I write on it? Because this changed my trading psychology. Because there are parts in it which made me kind of realize only by just like a conscious choice you can let go of something that's holding you back. And this was a really good way of like I was saying, I didn't want to do the work. I didn't want to do the journaling. I didn't want to like look at why I was FOMO trading and stuff like that. But this was a good reminder. There was a particular point in this book that said something about how when you've got a thorn in your side, you will then create your entire life around making sure nothing hits that thorn that causes you pain. So, you know, you might sleep on one side, you might put loads of extra pillows on, you might wear loads of extra coats. But inevitably at some point, something's going to bump into you and make you feel pain because that thorn's moved. And you don't want to do the painful thing and remove it, but that choice is always there. And when you actually decide to like make that change, you realize that why did I just like live under this cloud for so long? That was something that really stuck with me in that book. I'm just trying to find what I wrote about it because it's a pretty good review that I gave it. And I'm just going to read some of the other books that you might like. Some that you might know or not. The Things You Can See Only When You Slow Down by Heyman Sunim. Reminders of How to Access Your Higher Self, which is what you need in trading. One Good Trade by Mike Bellafiore. Trading in the Zone by Mark Douglas. The Alchemist by Paulo Coelho, which is okay. Road Less Stupid was a really impactful book because I realized most of my losses were coming stupidly and was holding me back. So again, it was just doing the work and realizing what was holding me back and doing less of it, and recognizing why I was doing it. I didn't actually write it down. I just picked it off my shelf and I was like, I actually really like this book. So yeah, that is a good reminder of like, you're able to let go of things, and particularly with trading, you can carry a lot of shit with trading that can be let go of, and examine behaviors that you're doing in your trading that you're doing elsewhere in your life that becomes a habit. So the habits that you do in your life, you're going to bring to the trading charts anyway. So if you're able to like become aware of the fact that you're doing these habits on automatic based on emotions or just based on the habit of doing it, you're able to challenge those things. And a lot of those will then translate to the charts where, oh shit, I've got to get in. And then you go, oh, why do I have to get in? You know, there were moves when I was sleeping that I would have had to have got in to make money or to get on the move that I missed. So what does it matter if I miss this one that I'm looking at? Like, I'll just chill, and then better behaviors and results built from that, and habits. So yeah, I hope you've enjoyed this stream. Sorry for the couple of memory lapses, but my head is absolutely zapped from a very tough few days. And contrary to what has been said, I have not been smoking weed, but now I'm going to go and do that and make my brain go and chill out a little bit. So thank you for joining. Thank you for being here right now. If you're still listening after I've been waffling along a load of shit. If you want daily updates from me, like what I've done in the beginning section, hit subscribe. I do a 20-minute video-ish, 15-20-minute video mostly each day, which has about 3 to 4 minutes for Bitcoin, Ethereum, Solana, and Hyperliquid each. And then I have a written article just summarizing that video where you can just digest that easier, basically. There's Discord access as well. So yeah, thank you very much. Have a good evening. Happy trading for the week.